You've seen the pictures. The glittering city of ambition, of luxury, of these futuristic skylines that just seem to rise from the desert itself. That's Dubai. But behind this shimmering facade of wealth, a much darker story is unfolding. Today, we're diving into how this global hub became one of the world's most sophisticated machines for washing dirty money. Let's start with a number, and I want you to really let this sink in. $68 billion. That's the estimated value of offshore real estate just hiding in plain sight in Dubai. Now, this isn't just regular investment capital we're talking about. No, this represents a massive tidal wave of money that's looking for shelter, looking to hide from scrutiny. It's the kind of money that fuels criminal enterprises and warps markets on a global scale. And it forces us to ask a really critical question. Whose money is this really? This one sentence, caught on a hidden camera, tells you almost everything you need to know about how a system like this can flourish. Don't ask, because it's not our concern. It's a culture of, well, willful blindness. The priority is to close the deal, not to ask tough questions about where the money's coming from. You see, this isn't a bug in the system. It's a feature. So how exactly did Dubai earn this reputation? Let's go ahead and pull back the curtain on its gilded secret. Let's see who is actually buying up the city's most exclusive and most expensive properties. The sheer scale is just immense. We're talking about more than 250,000 foreign owners holding over 800,000 properties. But the real story here isn't just in the numbers, it's in the profile of that clientele. Major investigations like the recent Dubai Unlocked project have peeled back the layers to reveal a who's who of high-risk individuals. We're talking sanctioned Russian oligarchs, leaders of international drug cartels, corrupt politicians from all over the globe, and of course, fugitives on the run from justice. And this right here? This illustrates the contrast perfectly. You see, Dubai markets itself to influencers, to entrepreneurs, to the global elite, but its property records, they tell a very, very different story. Your neighbor in that luxury tower might not be a CEO. It might be someone like Angelo Pendelli, the alleged head of Australia's most powerful drug trafficking network. Or maybe it's Hari Shankar Tribwal, a man accused of laundering billions through an illicit betting app. And look, these aren't just a few isolated cases. They are the shadow residents of Dubai's luxury market. Okay, so how does it actually work? I mean, how does $1 million in, say, drug money become a pristine, legitimate-looking penthouse with an ocean view? Well, it's a process that effectively turns real estate into a high-end laundromat. Money laundering almost always follows a classic three-step formula. First up, you have placement. That's the part where you get the dirty cash out of its country of origin. This is often done using ancient trust-based transfer systems, like Hawala, that crucially leave no digital trail. Step 2 is layering. This is where the real deception happens. The money is passed through a complicated maze of anonymous shell companies, often in different secrecy jurisdictions, all to hide where it originally came from. And finally, you get to integration. That money, now obscured and hard to trace, is used to buy a tangible, legitimate-looking asset, like a Dubai property, and just like that, the criminal proceeds appear clean. And make no mistake, this is not a regional problem. The illicit funds flowing into Dubai are truly global. You've got sanctioned Russian elites, corrupt officials from sub-Saharan Africa, vast criminal enterprises in South Asia and Europe. It seems Dubai's real estate market has become the destination of choice for dirty money from just about every corner of the world. To make all this happen, criminals use a really sophisticated toolkit. Shell companies are the basic building block. They create that first layer of anonymity. Then you have nominee directors, who are basically decoys paid to sign documents. The free zones within the UAE itself offer extreme corporate secrecy. And incredibly, large cash transactions are still common, which minimizes the paper trail that investigators might try to follow. It's an entire ecosystem, and it's built for opacity. And the sums of money being laundered are just staggering. Take the Mahadev betting app scam out of India. That's estimated to be a multi-billion-dollar operation, with much of it laundered through Dubai. Or the Aussie cartel, which allegedly pulls in $1.5 billion a year from drug trafficking alone. Even a single isolated case of Russian tax fraud saw nearly $100 million washed clean through high-end properties. Now, this is really crucial. A system like this doesn't just happen by accident. In many ways, it was perfectly engineered, maybe even designed, to attract and protect this exact kind of wealth. Let's take a look at the blueprint. Just look at this comparison. In a transparent system, you have public registries showing who owns what. In Dubai, that information is secret, inaccessible. In a transparent system, real estate agents have to perform anti-money laundering checks. In Dubai, there are major exemptions, and historically, enforcement has been very weak. What about information sharing? Well, it's not automatic. Foreign authorities has to go through a slow, formal legal process, and that's if they even know where to begin looking. This entire system of opacity really rests on 4 key pillars. It all starts with engineered secrecy, thanks to that lack of public data. Then, that's compounded by systemic loopholes, like the huge exemption for property developers. Driving it all is a powerful economic incentive to just keep the foreign money flowing in no matter where it's from. And finally, this is all possible because of a massive global regulatory gap. You see, banks now automatically share information on foreign account holders, but for real estate, no such system exists. And this has very real-world consequences for the rest of us. Researchers estimate that every single year, governments around the world lose $2.7 billion in tax revenue. That's money from rental income and capital gains on Dubai properties that simply goes undeclared. That's money that should be funding our schools, our hospitals, and our infrastructure. But after years of investigative journalism and mounting international pressure, things are starting to change. A reckoning is finally being forced. The secret is out, and the system is now under immense pressure to clean up its act. A key player in all of this is the Financial Action Task Force, or FATF. You can think of them as the world's anti-money laundering watchdog. And for any country, being put on their gray list is a major reputational blow. It signals to the entire world that your financial system has serious weaknesses. This timeline here shows a really clear pattern of action and reaction. In March 2022, the FATF put the UAE on its gray list. That sparked a flurry of reforms, which led to their removal in early 2024. But just a few months later, the Dubai Unlocked investigation dropped, raising a whole new set of questions. In response, the UAE has enacted an even stricter anti-money laundering law set to take effect in late 2025, right before their next big evaluation. But not everyone is convinced. Not by a long shot. Watchdog groups like Transparency International are arguing that while the new laws look great on paper, there's very little evidence that they've actually translated into effective, on-the-ground change. They point out that hundreds of publicly reported cases of suspicious property ownership seem to have resulted in no action at all from UAE authorities. For its part, the UAE points to very concrete legal changes. This new 2025 law, for example, gives its financial intelligence unit more power, and crucially, it holds corporate managers personally liable for compliance failures. The government's message is clear. They say they are moving from compliance as a matter of form to compliance as a matter of substance. And this brings us to the central question that's hanging over Dubai's future. Are we witnessing a genuine fundamental shift toward transparency? Or is this all just a sophisticated performance of compliance theater, a show designed to satisfy the international watchdogs without really disrupting the flow of that illicit money that helped build the city in the first place? Ultimately, it really just boils down to this one question. As the entire world is watching, is Dubai genuinely cleaning up its act, or is it simply learning new, more sophisticated ways to hide the dirt? The answer to that question will have profound implications for the global fight against corruption and financial crime for years to come.
So while markets rise and fall, systems like this quietly move billions behind the scenes, hidden from the public, hidden from scrutiny, and sometimes hidden from the law itself. Because in global finance, the most powerful forces are rarely the most visible. And this is just one of the systems used by the unseen elite.